All right, hey, what's up? It's Jamie. I'm home. I don't know how great this lighting is, but it's getting dark, and it's been raining. I was waiting for it to stop, but I wanted to do this video. I'm going to do it in one take, regardless of any stuttering or stammering, or just did it. Or if I, don't sound perfect. I'm not going to edit this. I'm not going to drop anything in, I don't think. Because, when I do that, it just takes me so much longer, and I procrastinate, and then I never post the videos sometimes. So this is specifically about a mistake I made. I think it's important to talk about this. If you're a trader, if you're an investor, not only on the premise of if you're not paying attention, it's going to be very costly. But this scenario applies to a lot of different situations, right? And also, I don't want you to be discouraged or be afraid of failing, regardless of the emotions that you feel. So this is just my input and my personal opinion. If you're one of my kids, I love you, and I'm trying to teach you something. If you're a friend or somebody that comes on here, don't take it personal. It's just my input. So I'm going to use Tesla like I usually do for a stock. I'm sorry about the raindrops, but it's still sort of rain here. But I knew that going into earnings, you had Netflix and Tesla. I mean, both of them did really well, in my opinion. And I don't want to get into all that, but Netflix did really well, but Tesla did well, right? Didn't miss, better than expected. A couple things weren't fantastic, but overall, I believe TSLA is a great company. And I love the volatility. Sometimes it can be painful, but depending on your strategy. But let me tell you what I did wrong. So Tesla had earnings on Wednesday, whatever that was. I mean, today's Thursday, the 21st or the 20th. So on Tuesday going in, I had some puts and calls, less than a week, several weeks out, a year out, like just the variation of them, all very inexpensive. One was expensive, a call I made. I wasn't selling a call. Now, what I thought was I was selling one covered call in the event that it was in the 290s. If it dropped, which happens after earnings, I would be able to collect the delta between what the premium I collected is and for what, when it drops, what the premium declines to. So it dropped pretty drastically over the past 24 hours. I mean, overall, like $40, right? Almost $50. So that would have been a nice, a nice little come up, I guess, to me. I'm just trying to think of the right word. If I collected $9,000, which I just did one, or actually more than that, if I collected $10,000 selling my covered calls a year and a half, 2 years out, with no intent of ever waiting to expiration on one contract, I get the money, right? But if it drops, the premium drops from $10,000 to say $5,000, I can buy it back. The cover call I sold to collect the $10,000. So, I'll buy it back for $5,000, $6,000. So I get to keep the difference of $4,000 or $5,000. Now, mind you, the stock price has dropped drastically, $40, $50, $30, $40, $50, which for every 100 shares is costing you $1,000. So if it dropped $50, I'm just going to say you lost $5,000. If you were to sell your shares. Now, if you live in a house, I'm going to put this in perspective. If you live in your house, I was talking to somebody about this earlier today, and you live there as your primary residence, and for whatever reason, something happens where maybe there's some major construction, something happens, it's a longer term thing, it lasts 3 to 6 months, and the property values in your area drop drastically, right? Like the house that you own for $500,000, $1 million, whatever, $700,000, drops 20%, 10%. You wouldn't panic and say, "Oh, we're going to sell this house. It's going to zero." in most cases, right? In the majority of the time, you're like, sorry, I live here, it'll be all right. And then the market rebounds, and you know, you get your original value, and then hopefully it goes up 2 or 3% or better annually. So with the shares of the company, could be Google, Microsoft, Apple, I don't know, what else? What's that one right now that's a big one? NVIDIA, right? Netflix, whatever it might be. And you're like, well, I'm going to keep those shares. So I don't really care what the share price is that much because I'm not selling them today. I'm not selling my house. I'm you know, it's just down. So eventually it will come back up, and that $4, $5, $3, $2,000, whatever that it's the evaluation has gone down to, will get back right. But that contract that I would have sold, which I didn't, I would have kept the premium. I would have bought back the contract. I would have never lost that in this case, around $5,000. But I made a mistake. I was distracted. We can come up with 1,000 excuses why we don't execute on some reason. I don't want to give you that. For me, it's you know, I had some family visiting. My wife is away. I had 3 dogs to take care of. My job. I just had a combination of things that just had me distracted. And because of that, sorry excuse, I did not sell my covered call that I thought I could have swore I did. And sure enough, it dropped, and so I got the devaluation of my share price, but I missed the premium of you know the difference between what I collected and what it dropped to. And there's nothing I could do about it now, right? I already missed that 290 something to 250, 260 something bus, so to speak. Think yourself, another analogy is like, think yourself at a train or a bus or a plane, airport or a train station, and you missed your flight, you missed your ride, and now you got to wait for the next one. So not only did I miss that, but I also missed the inverse stock in this specific case of TSLA, which is TSLQ, and I bought 500 shares of the wrong company. What? I bought 500 shares of TSLX, which has nothing at all to do with Tesla. And it's because I was just trying to do something fast. I was doing other things. And I remember I usually keep my phone or something, a laptop, something where I can see usually my phone, to be honest, like, you know, what the share price is doing. I'll glance at it during volatile times because I want to see what the price action is. And I remember looking at the TSLQ and going, well, at least I got that, right? And it was really not the right stock. It was TSLX. And I'm going, what's going on here, right? I didn't even notice it yet. I'm like, why am I not making money? Because I could see the share price of TSLA, Tesla, going down, 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 down. But yet TSLQ was doing nothing. And I was like, man, what is going on here? Something's wrong. That's just weird. So after a couple hours of me actually going, let me look at this, looking closer and inspecting it, I realized I missed again. And I bought the wrong company because of one letter, TSLX, instead of TSLQ. So I was very, very angry. This cost me probably, in reality, about $10,000. Meaning I could have, I was down $6,000 overall, right? Roughly, in share price, in addition to some premiums on calls that I kept. So easily $6,000, maybe even $8,000. And I could have gained $10,000 to offset that and probably been ahead. And so I was very, very frustrated. Okay. Now, I didn't sell the shares as it's gone down. And as I right now believe it will most likely continue to go down. Doesn't mean it will. This is not financial advice. As I do this video, it's just my opinion and probably the way things might play out. Now, it did what I thought it was going to do going into earnings, and not because I'm a guru or a genius, but one thing's for sure is as you drive these roads and there's detours and things that happen in bad weather, you get prepared and you know, like, okay, if this happens, I'm going to do this, right? Like, so if it rains really bad, I have an umbrella. All right. So I got this umbrella at, I think I got it at, actually just got it not too long ago. I got it at a market because the other day I didn't have an umbrella. I left it at work and I said, let me just get this cheap little umbrella in case I need it. And now it's, it's pouring out, and should I need it, I would be prepared. I wouldn't get wet. Or if one of my kids, was with me, they wouldn't get wet because I would shelter them under the umbrella. Whoa. So being prepared is a good idea, and being able to switch, like if you've ever gone skiing, water skiing or snow skiing, you have to be able to shift your weight, sometimes if you lose a ski or something happens. If you're driving and there's something in the road, you got to be able to maneuver, and your reaction time is key. So if I have 500 shares of a company, or not even a company, an ETF like TSLQ, not TSLX, and all of a sudden Tesla started to run, then I would dump those shares and I would never have lost the opportunity to make money, because I'm like, it's running, so let me go ahead and get rid of those. And if it was dumping, or I'm sorry, if Tesla was dumping and going down, then I could have said, all right, let me add more TSLQ and get rid of my calls, because it's not going to do well. And going to lose money either way, but you're going to offset it with the opposite or inverse of the puts and calls, or if there is an inverse stock that you could have taken advantage of. But if you miss that, then it's a one-way street. There's only one way to go. You're in gridlock, and there's nothing you can do. I can't believe it's right. I'm sure it's messing up the sound of this video. Well, anyway, I'm about done anyway. So hopefully you're forgiven. I hope that helps you. I'm just being transparent. I do feel like I've caught a second opportunity here. As the share price has now gotten below again 260, it's a good chance it's going to run down to somewhere between 220 and 230. I don't know that, but that's what I think is going to happen over the next week or so. If it doesn't, I'll be prepared, because I still have some calls. I still own some shares, but it's already dropped going into the weekend into the 250s, right? 256, 257. If that continues going into the pre-market on Monday, I halfway hope it does, because one, I will make some money on the puts that I open up before the market closed, as I was watching it right as it got closer to 4 o'clock, and I opened up several put contracts, some cheaper, some more expensive, with some further out, some closer, with the idea of, okay, if I can, make a few $100 or even a few $1,000 come Monday, I will dump those contracts and lock in the profits to help me offset some of the losses and missed gains, that profits that I could have had should I been paying attention the first time. So I have TSLQ now. I have 600 shares, and I have several put contracts. So they might pay out. We'll see. But if they don't, I do have the shares and the calls to kind of offset that anyway. So coming into Monday, I will try to kind of recap on this. So it's good to be liquid, to have the money to be able to do it. Otherwise, you have no opportunities at all. It's also good if you're trading like on any platform, unless you're cash only, then you got to be careful of the pattern day trading, PDT, right? PDT, pattern day trading, rule. I think that's what it is, to make sure that you're not, locked out of being able to trade, right? Because you're like, I need to buy some more shares, I need to sell some more shares, and you won't be able to. So whether you have over 25 grand, or if you're just, making sure that you're not into that 3 strikes, type of thing, or you could kind of like regret that. What else did I want to say? So I guess that's it. So as far as the stocks go, with Tesla, that was the thing. So if it does drop down to 230, 220, right? Or even there's a chance, I've been hearing, right? Again, this is just through groups and things I participate in. it's possible it could break 200 and get to the 190s. I don't think it'll go much lower than that if it does, but it could. And if it does, I will probably just add again. I'd probably get back to 200-300 shares of Tesla at that point, as I think it will kind of hit that bottom channel and go back up again. I mean, Tesla overall has some really positive things going on. You got the Cybertruck, you got the battery back, you got the partnerships with some of these other companies. There's so many things, you know, basically where they're going to be using their charging networks. You know, where I think Tesla is a good company to hold down the road. So you're just looking, you're just paying attention, looking for opportunities, being prepared, being able to buy, not backing yourself in a corner, and not getting too spread out, right? Because if you get too spread out, you're not going to be effective. And these are all things to consider. So I better go in before it starts to really downpour. I don't even know how good the quality of sound is, and I apologize for that. But again, I said I would just rough it and do this raw video here. Anyway, all right, I'll see you guys next time. Maybe I can cut this down a bit, but if not, you know, hopefully I hung in there this long. I'll see you next time. Bye.